To my reading glasses. I've got to get my other one.
These are my reading glasses as well. Jeff, they're your reading glasses as well, right?
I read, I write, I view podcasts with these glasses on.
That's it.
Sorry, you're not going to do it.
Okay.
All right, everybody, welcome to Cyber Bulls. So with everything that's changing with Tesla, what's happening with the stock? There's some people that are saying that why are we focused on cars and deliveries and margins when everything is about to change? With Robotaxi here, everything about the company is going to change. We're also going to talk about the vote. Who's saying yes, that they're going to support the vote, and who's saying no. And we're going to look at the shorts once again. The shorts have come back with a fury, and they've started to increase their positions. We'll also talk about robotics AI. So we've got Jeff Lutz here with us, and we've got Alexandra Mertz, the Bulls. Xander is dealing with some crazy weather in his hometown right now. So thank you. Welcome, guys.
Great to be here.
Nice to be here.
The company and the product. Don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. I enjoy listening to bears.
Looking for the red flags. You're supposed to react.
So let's start with you, Jeff, because this was a topic that you started in a space that we were in together a couple of days ago. And you started talking about how, when you look at the company and the stock, Robotaxi is going to change everything. What did you mean by that?
I think if you look at the company today, and this is where kind of bears and bulls debate and get hung up, and there's leading, lagging indicators, like where's the revenue coming from today? Revenue's coming from selling cars. And that will continue. And what will happen is you'll see this gradient appearing over time where both the revenue contribution and the margin contribution will start moving more and more towards software as a service. And I think it will come in many forms. I think it will come in the form of Tesla selling FSD, Tesla selling and having a robotaxi service, Tesla licensing their FSD, and maybe Tesla even licensing network support for others to host their own taxi service branded with their vehicles. So I think Tesla has set the table. They've shown us exactly what they're working on. They've even, if you look at where the investment dollars are moving, and you see all the actions that have occurred in the last quarter. First off, they've kicked up the investment dollars into server capacity and silicon significantly. And you've seen the unfortunate actions that have to occur in terms of making decisions about reductions in force. And these are not small numbers. I think this is one of the things that's kind of moved quietly in the background. I think the OpEx number is moving. And this is the operations expenses. These are expenses outside of COGS, and some of them will actually be in COGS as well. So that, like, for example, the reductions that occur for people that are working on the line in the factory or people that are feeding material to the line in the factory will actually hit COGS. And then the people that are, working outside of the factory, working on engineering, working on services and so forth, that will hit more of the OpEx line. But it's just basically different pockets of money. But what they impact gross margins on the COGS side, and the impact on the OpEx side, they'll impact the operating margin for Tesla. And what that does is it frees up cash, and it also frees up margin room for them to invest more on the AI side. So I think some of this confusion is purposeful from some of the bears of like, Tesla's not an AI company, look where the revenue is coming in. And that's the same kind of statement of like looking at trailing 12 months valuation versus like current and forward valuations. And it looks like we're going to really start seeing that taking off over the next year in terms of where the revenue is coming from. The revenue is going to be coming more from the services side. It's going to take a period of time, but it's going to start coming from the services side. And finally, we don't have the data on this yet, but we've seen obviously a dramatic improvement through the 12.x series of FSD, starting on 12.1, going all the way up, to what we have today, which is 12.3.6. And Elon is saying that 12.4 will be a 5 to 10x improvement. And if 12.5 is another 5 to 10x improvement, I mean, you could be seeing something on the order of a 25 to 100x improvement. But we obviously, we need to see data. This is a statement. They do have internal data. They do have information that would feed that estimate. But I mean, it would be great for us to be able to experience that driver. So if that plays out, you can really start playing out almost monthly releases, major, I'll call them mainline releases, when you go from a 12.4 to a 12.5 to a 12.6, and all of a sudden you start landing on a certain level of performance by that 8.8 Robotaxi unveil. So I think, it's changing right in front of our eyes, and you have to look at lagging and leading indicators. You have to separate them, and you have to see where the company's investing, where the revenue's coming from today, and where they're investing, where the revenues may come from in the future.
Okay, so Robotaxi is going to change everything, is what you're saying, right? In one sense, I get it, right? Because you're going to see what's the auto industry. The auto industry is, companies selling cars. Here, when you've got Robotaxi ready cars, autonomous cars, it will replace every other car out there eventually, right? Like, why would people want to buy a car that's not that? It's redefined it. And then you're changing the business model from one-time sales and small margins to recurring yearly high margin service software business. But how long will it take Tesla to get there, right? Because we're talking factories. We're talking, 12, 15 years of building an auto industry. Now you're switching to this. Is it going to take a long time, or are they going to be able to make the switch seamlessly? What do you think, Alexandra?
Well, it's not as if they haven't prepared for it, right? If you think what Tesla has today, meaning a fleet of, 6 million cars now out there that are all equipped to be robotaxis, it is not as if a company would today decide that they're doing something they haven't prepared for a long time. How many years now do we have hardware that has been proven? How many years of data do we have that helped build what is today achievable? Of course, more recent data and more recent data processing is much more effective than what happened years ago. But what happened years ago led to what is possible today. So the switch to software as a service model is really a switch. I don't think there is a lag to be considered. Now, how long will it take to ramp that? How long will it take for that to be more profitable than the 15%, 16% margins from selling cars? That may take some time, right? Just because it needs to grow. By having the foot into China, it's going to go probably much quicker than we had all anticipated, because everybody here anticipated for a long time it's going to be in a couple of states here in the US, and then we'll see, federal approval, whatever. The fact that it may go international, and especially in the biggest automobile and transportation market in China, was probably the stroke of confidence that was needed to ensure that the transition that's happening, that brings some, painful decision making with it. I mean, nobody liked what happened to the supercharger team. Nobody liked the way, jobs were cut in the last couple of weeks. But if you're convinced you are on the right path, and if you're convinced you have the main decisions now in place to be able to activate the revenue stream from it, well, then you have to do it. So I don't believe the moment where we will see high software margin is too far away. I expect it to be 2026 and forward. So when I hear people saying, oh, this is going to be 5 to 10 years, and then obviously bots is going to be 10 to 20 years, whatever, I think that is completely delusional.
Okay. And then, so let me share this. We've been talking about Robotaxi changes everything. And then Elon actually replied to this tweet. Somebody looked and said, they pointed out how ridiculous it was when Netflix wanted to split off Quickster to be just DVD only. At that time, Netflix was doing two businesses, DVD plus streaming. And people thought it's incredibly stupid for Netflix to do this. This was 2011. You see that? And then Elon said, now apply this logic to Tesla, because Tesla's going to need to make that switch from a car company to an autonomous, subscription, robotaxi, robot company, AI company. What did you guys take of this? Is it just, oh, okay, hey, we're making that transition? Or does it mean something bigger? Does it mean like we're going to just completely switch and we're going to go all in on AI? What does that mean? I don't know. It can mean as far as let's stop making cars that we're going to sell to consumers. Let's just make pure robotaxis. If this works, why would you even make any more car at this point that's not robotaxi ready? Could it mean that they're going to license the car manufacturing to another company, let them do it, and like stick to the autonomous part of it? What do you guys think about this? Who wants to address that first?
I can. Tesla's going to make cars because others and other forms of AI devices, whether humanoid robots, there could be different formats of vehicles as well. Tesla's going to continue to make them because besides the Chinese, no one's really stepped in and said, hey, we're going to fill this void and build an EV that's better than its ICE counterpart. And until that happens with regularity and consistency, you're not going to have the EV transition that's the mission of the company. So I do believe that Tesla is going to continue to be designing category leading vehicles and putting them out there. And there is a pretty close coordination needed to deliver some of these AI services between how the hardware is designed all the way from the silicon layer all the way up through the fabrication of the device. The other thing that Tesla has maintained this lead on is basically outside of China being able to produce an EV at ICE gross margins or comparable or better than ICE. No one in the world has been able to do that outside of China. And that's a very special thing. That gets into the DNA of how the product is designed, how the company functions, how they manufacture, the design of their factories. And these aren't things that come up or can be taught overnight. So I think they're going to continue to produce cars so that their AI services can be displayed and proliferated in the manner in which they so desire.
I have a little bit of a contrarian view to that. I think they will continue producing threes and Ys for quite some time, and then obviously, robotaxi and any other form for it. But I doubt that they will continue building Model S and Model X. I love my Model X. I was actually saying not later than yesterday that when this lease comes up next year, I'm going to purchase one just because I'm worried that there is not going to be a follow-up 3 years later. And I think this is the best car ever. So all this to say that the way Tesla will operate cars is few models at high volume. And I'm always coming back to that write-up from Adam Jonas from last year. They actually may allow other car makers, especially the American and European OEMs who just, are just so late to the whole thing where it will become a question of survival, to have the drivetrain and everything else from Tesla and just build the outside and the personalization, what you see of a car themselves, just so that the whole infrastructure, batteries, FSD is Tesla inside, and the car makers just adopt it to their role. So there will be millions and tens of millions of Tesla cars out there. They just may look differently. And I'm a little bit worried about the future of the S and the X. Very profitable products today, but just not the quantities enough to make this competitive or a good choice compared to the other products.
Oh, sorry, Alexandra. Some reason, the last couple of shows, you and I are just not understanding and agreeing with each other. It does not make
as
any
long as
sense
I win
at all. You often will win. Yes, I get it. It doesn't make any sense. If Robotaxi starts working Why would you ever continue making cars that you're going to sell to a consumer and just make $7,000-$10,000 of profit for one time? Just not going to do it anymore. No, it's going to take 3-5 years. I'm not saying it's going to switch over overnight, but it doesn't make sense. So the other part that I wanted to talk about is I just did a show. I'll publish this show this weekend with Larry Goldberg. I don't think enough people are talking about, did you guys hear about Baidu? Baidu, the general manager of their autonomous vehicle division in China, was interviewed by Shanghai News, and he said that he's very open to cooperating and partnering with Tesla. He said because they have the technology stack that they have, plus it'll get them to roll this out sooner, faster pace. Baidu is considered to have the most. They have more cars than Waymo. They have 500 cars that are actually autonomous today in many cities in China. And then, of course, they found out, and Jeff, you shared this video with me where CNBC went and actually took a Baidu, that 50% of those cars actually has a trainer, just like our FSD people are there to supervise. And then 50% of them, they didn't say it, but very likely they have teleoperation to control it in case they are. And they have a plan to be 1,000 cars by the end of this year, 2024. And they said that by next year they're going to be profitable. They cost them $27,000 to build their cars. Why would they, with that progress, say that I'm willing to partner with Tesla? Because Tesla, 1,000 cars sounds a lot, but it's not enough. It just doesn't get them where they need to be. So my thinking, of course, where the way this is going to all fall apart is Robotaxi. They proved that it works. It starts to succeed. More and more cities will accept that. You're going to start building as many Robotaxis as you can. And then eventually you're going to ask yourself, why am I building these other cars? It doesn't make sense. Okay. I mean,
well, we don't disagree that much, because that's my reasoning why they would stop the S and the X. I just think the 3 and the Y still have a while to go.
What are you talking about? Like 5 years, 10 years? I'm just saying maybe 3 years and then they'll stop doing it.
Yeah, well, we'll see. Maybe we're just off in timing, but I do agree. But I still think they have such an advantage, or they're so much ahead of any competitor for the drivetrain and for the FSD, that I still believe they could, continue building those and just sell it to the OEMs. Now, my question actually much bigger is, do you think Baidu is the OEM that Elon always refers to? Because I don't. Baidu is not an OEM as a licensing.
No, I don't think they are.
No, they are. They're a software and search OEM. They're not an auto OEM per se, but they're definitely original. OEM is original equipment manufacturer. They're definitely considered an OEM, but just on the software side.
So, Jeff, I want to ask you this question, because you, of most people that we talk to that have the most experience with this, how likely is it a company like Tesla, right, a manufacturing factory, automotive industry company, how can they switch? And I know that you've answered it, Alexandra. You did a great job answering it. I love the way you said that, right? Well, it's not like they just decided this year. They've been planning this ever since they were born. They were headed in this direction. But you know what I'm saying? This is a massive switch from a hardware company to a software business model. Or, you know what I mean? Like we've seen Apple do it, right? Kinda. What's your plan thinking there, Jeff?
They're Apple and Tesla are completely different from an asset perspective. Apple doesn't. I think they have one small of their own operated factories and for doing like computer peripherals and so forth. Everything is a contract manufacturing outsource model, where they are purchasing CapEx both on the supplier and the factory side, but it's kind of shared as well with the contract manufacturer. Whereas all of Tesla's capital, everything is Tesla owned and purchased, and including a lot of the capital that they have at suppliers, unless it's a common part in the industry. So how do they make this transition? This may be one of the reasons you saw them put the brakes on. I mean, part of, a lot of the factory expansions and new greenfield operations, you've seen them put the brakes on. I've given this a little bit of thought, and I do think that they're going to have to ramp into kind of this robotaxi world. I think you're going to have a number of years where people want to drive their car and they want to use robotaxi services. And you're going to have people that don't want to use robotaxi services and want a car. And I think that's going to go on for a number of years. But you have seen peak auto already hit. Peak auto hit, I think, in 2018. And we haven't shipped more cars since then, at least looking at the US. I think that's true for the world as well. So this is the transition that's occurring. The question is the speed and pace. I think you're going to have a hybrid model, but not the way we think of hybrids today. You're going to have a hybrid model of you're going to need a fairly significant robotaxi ramp. These cars have to be safe. They have to have a different level of ingress, the ability to ingress and be able to exit the vehicle. It can't be kind of a standard car. Cars today are kind of clunky to get in and out of, especially if you're over 6 foot tall. And so I think they're going to have there's going to be differences with these robotaxis that make them more viable for mass use and for high frequency traffic in and out of the vehicle. The ability to clean them, the materials, even the processes to clean them and to keep them sterile and looking new. I think construction techniques, I think Tesla's thinking very deeply about how this vehicle is going to be constructed for repairability, for serviceability, and for a long-term robustness, because they now have million-mile plus batteries, million-mile plus drivetrains. You can't have those things on the inside being so robust and being able to last literally for decades and have a conventional exterior on the car. So I think Tesla is thinking deeply through these things. So I wouldn't write off Tesla, and that this is one of the reasons I wouldn't write them off doing vehicles in the medium term and even long term, because I think there's a tremendous amount of innovation needed to do a robotaxi profitably and properly that will look good and stand the test of time.
Walk me through what you guys see is going to happen, right? So let's assume all the good things are happening, right? FSD 13, FSD 14 comes out, and it's robotaxi ready. They actually launched this. A lot of partners come up and say, we want and need your license. What is going to happen now? So Tesla is going to need to not only make as many robotaxi. Well, first of all, I know you've been saying this a while, Alexandra, that they can already just take the existing fleet that people have. They can already take the existing Model 3s and Ys that they're spitting out there. Those can become robotaxi just the way they are. Then they're going to make a robotaxi first design vehicle and have that launch. How are they going to accommodate these other partners? They're going to license. There's going to be, I swear, more than just 2, maybe 2 this year.
Wait. They're not robotaxi license takers. They are FSD license takers, meaning they will allow. I don't think that we will see a Ford robotaxi immediately. Exactly. That's what I'm saying. So I don't think that Ford is going to license. I mean, if we think Ford is the first licensed partner for FSD, that doesn't mean that Ford with FSD in sight can become robotaxis. I don't think so. I think Tesla's. You think that any car that has Tesla FSD inside can join the robotaxi network?
Yes, that's why they're licensing it.
No. They're licensing it for full self-drive.
I understand, but you're going to spend all the time and effort to get the cameras in place, the hardware in place, get the software in place, because you need a new revenue model which you can share, which is robotaxi revenue model, not because of the $8,000 one-time here or the FSD uptake.
Yeah, but at the same time, I'm talking about America now. At the same time, the EVs sold in America, they have a long way to go. First of all, in number of competing cars with Tesla, and they're not even FSD ready, right? So that will take 3 years anyway. So maybe, I mean, I haven't even thought that through. Maybe they could join the Robotaxi network, but I just don't think that is a priority for them. For them, it's a priority as a safety feature, as a feature that, that suddenly software is an issue that they can have an answer. Now, in China, honestly, I haven't thought this through, but for me, I don't think Tesla is as keen to share the Robotaxi network as they are keen of selling and licensing FSD. But I could be wrong on this one. I'll give it some more thought. You did wake up something in me there.
I think you both have points. They're different. You are licensing different things. So, but I do think Tesla is going to license FSD, and they're going to license the training to make FSD work. So the network infrastructure side. And then with that, then they've done all this work to basically create a Robotaxi system, the app, the network infrastructure to host the Robotaxi fleet, the fleet management software, like all this thing, I believe is going to be something that they will be able to license. So yeah, it becomes mind-boggling to think about it, because I think most auto companies today, first off, I don't believe there will be as many auto companies today, as 5 to 10 years from now. But whatever that number is, 5 to 10 years from now, let's say it's less than 10. I do think they're all going to want the ability to drive autonomously, where every vehicle they sell, the driver can just literally hit a button and speak a location, and the vehicle takes them there. It's FSD. Tesla can license the hardware, the software side of that. And I do think some of these companies, maybe all of them, may want to get into the Robotaxi business. It is a different business. It is ride sharing it's a different thing. It may not be in the core fundamentals or DNA of Stellantis to want to host Robotaxis. I don't know. But I think that's where I think you're both right. I think Tesla will want to enable the ability to sell and license that service beyond their own Tesla branded vehicles. But I think it has to be I think it has to be done properly. And this is one of the things when you do a licensing business in the tech world, one of the things you work with your partners on is you work on kind of minimum viability, or things that they should have in their product, so that your core technology is shown in the proper light and shown in a proper manner. So I think Tesla's going to have to think about that. Tesla's going to have to create a whole new organization. They're not going to want to mess with their core FSD AI engineers. They don't want them talking to Stellantis and talking to Ford and being flown here or there, in aluminum tubes all over the world to get FSD working. They're going to create a licensing organization that has technical people, that has product management, that have program management people, that have sales people, that have operational people, that that could actually go and basically take that seed of FSD and Robotaxi and get it moved out to other partners. So this will be a new muscle for Tesla to have to flex, which is creating the licensing business and then the resource infrastructure to go with it.
You just said, right, which is true, that it's a very different business between, automaking and autonomous robotaxi service. That's what I was trying to get at. That's what I'm trying to ask you guys this question, right? Because with the Netflix example, Netflix understood that they're very different businesses. DV rentals versus streaming. They wanted to go all in streaming, and they said, let's take the DV rental, create a separate business, because it's different metrics, different goals, different skill sets that you need to do. It hampers it's a two totally different business that don't really mesh at all with each other. Now, I don't think that that's what's going to happen in Tesla. They're going to split off the business. That's why I'm trying to understand. How do you do it together at the same time?
For 10 years, 15 years, Tesla has always been all about vertical integration. It's not to now throw out half of it and say, okay, we're only concentrating on the software side on it. I don't believe so.
That's true. Agreed. I agree. That part I agree. Completely agree. So it's different. Yeah. And Tesla is very comfortable with having multiple businesses as startups in its own.
Energy.
Yeah.
Energy. They bought everything, of course.
Yeah. All of that are different businesses. Well, okay. So what else does Robotaxi change, right? So what else are you guys thinking that it could change?
I mean, it does change the employees you need, right? And that's what we may see at the moment. I come back to the supercharging team. It may have been just an impulsive decision. Who knows? We'll never know. And I don't want to really dig into that. But the result now is it's probably only going to be half the number of employees. So we're going to move from 500 employees to 250, while still building out the supercharging network. But there is a clear message that the extreme growth rate that Tesla has seen is not going to be maintained. So what does that mean? It means that existing sites will become bigger, but it also probably means that there is not this drive anymore to get to 20 million cars produced by Tesla, that other people have to have to step up to do their part of the story. I don't know whether you've seen that yesterday. Yesterday there was an article about the federal budget having budgeted $7.5 billion, but in the end it was only 8 EV stations that were built, which were not Tesla. That article was wrong, right? This was completely misleading. The $7.5 billion were earmarked; they were not spent on those 8 charging stations. But the big picture really is that we feel that nobody else than Tesla has really stepped up to the challenge. As soon as they were able to get into the North America charging standard, you actually heard Mary Barra say, oh, great, that saves us, I think it was $500 million per year that we were supposed to throw out there to do all that. So I think Elon is very tactical in allocating resources. I think he's actually the smartest guy. There's a lot of strength, building teams, whatever. But I think one strength that's not talked about enough is allocating resources, and obviously the resource of money is one of it. And employees cost money, building out supercharging networks cost money. So this Robotaxi business model, which we're still all very eager to hear about in less than 3 months now, is probably in his head already set up in a way that the economies necessary in certain divisions, in certain growth promises that have been made, these cuts are necessary to build the other parts. And I'm very confident that he's doing the right thing, because he usually is like months, if not years ahead in his planning, and doesn't do things just to hurt, even if sometimes that's the feeling people have that watch it, but that there is a causality to it. And we just, I mean, I'm not smart enough to know what's coming, but I can clearly see that a shift has happened.
Mm-hmm.
Yeah, I think one of the things that sometimes gets overlooked is when Tesla develops this network infrastructure and training. The network infrastructure is Dojo, and inside of Dojo could be Dojo Silicon, could be NVIDIA Silicon. There's many different components to making up this network infrastructure. But there's nobody building out this capacity for the Robotaxi world at the pace that Tesla is doing it, that we know of. And that moat is going to continue to build over the next year or so. And we may be looking at a year or two out where Tesla would have had the cash and capital to build this out, to fundamentally support their own Robotaxi network and continue to improve efficiencies where they can allow others and actually host others. And this turns into a position where some of these other auto companies or companies that want to do this stuff, they went the capital intensive route on their Robotaxi design, or they're very capital intensive in the rest of their business, or they just don't have the capital to be able to get in and to be able to run at the scale that Tesla's at. Everything comes back to scale in these conversations. So I think Tesla's going to have scale on the network infrastructure side to host how these objects move throughout the world. And maybe NVIDIA ramps this up on their own and they start selling it as a service as well. but I believe Tesla is going to be uniquely positioned where a GM, a Ford, a Stellantis, a BMW, a Mercedes, a Figure, you name it, some of these other, on the robotic side, they're not going to have the ability to scale and have that network infrastructure. So they're going to have to buy it, and they're going to have to buy capacity from Tesla, and Tesla's going to have to allocate capacity to them and charge it out to them. And I think this is going to be a pretty significant business model for Tesla, because everything they do, they go back to scale and they go back to efficiency. And right now, there's someone selling this. There's someone that's selling silicon for 70% margins. They're selling training capacity. They're selling super high margins because there's really no real competition. And right now, you have people ramping up on the inference side, and you have people ramping up mainly NVIDIA on the network infrastructure side, some AMD, and then some Tesla. And nobody knows where the proportion of the work is going to actually happen. But Tesla has their foot in both, and I think they're going to be ready on the capacity side to not, I shouldn't use the word help but be able to serve and actually allow people to buy this service from them. So that's the future I see for Tesla. They're going to continue until others step up in any hardware category they're in, and they're able to build at scale and get the right volume and get the right scale and get the right profit and margins. Tesla is going to be in that category so it can continue and proliferate. Whether it's, think about superchargers, think about EVs, none of these things would have been successful, and still are. They're struggling to be successful at scale without Tesla in that category. So I do think they're going to have a presence in hardware until that, to allow that hardware category to achieve scale. Yeah. Think about humanoid robots, and I think they're going to have more of this presence, and more of their gross margins are going to come from allowing these companies to use their training capacity and host their services.
That's exactly it. That's exactly it, Jeff. You nailed it. While you were talking, I was like, yep, you're right. He is making today probably a laundry list of, okay, this is one business, this is the other. What is my margin? And you will see the columns with the highest margin getting prioritized, and you will see the other ones. He's gonna force competitors or future clients to step up, and until they step up, Tesla will be there. But Tesla can't do it all by itself. We don't want to run into the discussion that it will become a monopoly, and he's not gonna just give them the sweet little sugar parts they want. They also have to step up on the other parts. And actually in China, I have the feeling this is already happening. Baidu, BYD, whatever, these companies are building parts of it. But here in America, they are very laid back. I mean, always good in PowerPoints and showing one prototype, the GM one this morning again, but nothing behind it. I mean, when I just remembered this story with Mary Barra telling us that she's so happy she doesn't have to build up superchargers. Well, girl, wake up. You will have to build out superchargers if you want to be there. That may become one of your assets that you can keep. So, yes, Jeff, you really nailed it. He knows where the margin will come from. That's where he allocates the resources, and the rest he's sending signals to everybody else to now please step up.
Mm-hmm. So,
and not all these things, not all these things are going to hit. Like you think about the Tesla's battery business and what happened during that dynamic. They were really trying to ramp 4680, and I think they still are. But what happened is the industry became in an overcapacity state during that same time, and the economics said the cost per kilowatt hour it doesn't have that same competitive edge. There wasn't a supply bottleneck or a cost bottleneck, and therefore you can see Tesla moving back on the resource side and moving back from emphasizing on this. And then people will criticize them, saying, "Well, that's that failed or this happened." When you launch this many business verticals, where you're trying to basically, you're trying to achieve scale. You're trying to achieve scale in volume. You're trying to achieve scale in economics. You're not going to hit all 10 out of 10. But if they hit 7 out of 10, if they hit 4 out of 10 or 5 out of 10, it's going to be unbelievable for their business units. And I think that's the pace and the trajectory that they're actually on. But they're not all going to hit. And so if you're kind of on the outside and looking in, and you look at the batting average of like the projects they start and the verticals that they start, everything's about achieving scale. And if they can't achieve scale and kind of cost supremacy in there and kind of, then they'll actually have to back off, especially if the rest of that category is filled out and others have figured out how to ramp up.
Agree. And I'm sorry, Herbert, one last one, I promised. The one thing is, while we feel that 4680 was not a success, I mean, look at GM, those lithium pouches that were the complete disaster. Nobody even talks about it anymore. I mean, how many billions did they throw into that? And the other thing that Tesla has been doing for a long time, and I feel they're getting smart about it, and Elon addressed this about 6 months ago, is they were doing battery days, they were doing AI days, they were trying to educate the other guys. Only that nobody, learned the lesson in America, I'll say. In China, obviously, they copied and did what they could. But they've given up on that side. Now it's like, here's the baton. If you wanna do something in charging, do it. If you want to do something in battery, do it. If not, you can always come back and get it from us. And I think the way the mechanics, funny that's mechanics, have shifted is Tesla is today even more the leader than they always were. They were ahead of their time, of course, and even though being late, but they're today imposing on the other ones where they have to catch up if they want to survive.
So we're talking about this Robotaxi change everything. And there's several things that came to mind of what it's going to do, right? It's a flywheel. So first of all, it's going to change the cash flow influx that's going to come in. This business is incredibly, cash rich. And it's a yearly thing. It's just not only 5 times increase to automotive, but it's a yearly high margin business. If it works, if everything goes according to plan, that cash. And the other thing that it did was it's a proof point that what Robotaxi really is the first example of real world AI applying to a business model. If this works, then the bots, it's more likely that that's going to work. Now you have cash. Now you have bots in Robotaxi. Now you can even take that and revive the solar panel business, because now that business model works because you've got the bots helping build those things as well as installing them. And now imagine when you have that much cash. Now, I had this conversation with Larry. I think a lot of that has to go to AI compute. That will never end. Data centers, compute, energy, that will be required.
I take under on solar. I don't think they're going to getting back into solar.
Okay, yeah, no, I'm not saying it is either. Well, let me pause there. Maybe I'll come back to that one. But
what the hell are you talking about, Herbert? Solar? Solar roofs coming back? Solar tiles?
Yes, dude. Okay, let me get back to that.
Yields, remember when he was Herbert was
for your house, or are you talking about for the world?
The world.
Herbert sees the sun. Here comes the sun.
I will be proven correct. Let me address that. Just let me finish off this thought first, which is,
okay.
Tesla's going to, what does that mean that Robotaxi is going to change everything? It's going to give Tesla the cash and the AI, and to be able to do with the bots and Robotaxi, you're going to be able to create many different businesses now. Many different businesses.
Not Tesla. That's my point. I think Tesla wants the other people to step up in those businesses.
No. Okay, Alexandra, I don't know what's going on here. Tesla's history has always been every 2 or 3 years, they launch yet a new business that they never talked about before. They're going to continue to launch brand new businesses every 2 or 3 years. This gives them the ability to do that, especially if you have the bot. You can create anything at this point and be super profitable if you wanted to.
Don't forget, at one moment, we're going to go to Mars, right? And I think that was going to be the moment that we're stopped probably rotating every 2 or 3 years into something else. I actually think we're coming to the state when Dojo and when this whole training AI is where it wants to be, that Tesla becomes a mature company, which it's still not. I still consider Tesla a startup. No. So, but we'll see. Well, that would be interesting to do. But let's just make the point on solar and take the under. Get to that.
Okay, let me explain to people. Maybe they'll agree with you, but let me give you my side of the whole story. There are 3 major pillars to Master Plan Part 3. The first pillar is energy generation. Tesla's not doing anything in energy generation. If he wants to solve the sustainable energy in the entire world, he's talked about, right? I can't remember now. Is it 100 by 100 square miles? Is all that's enough to be able to power the whole world? Why won't they then do that so that they can get energy generation? So how are you going to power the data centers? Now you got the data centers. Now you got the compute. Now you have the battery packs. Where are you going to get the energy from? You're going to get it from nuclear. You're going to get it from Niagara Falls, and that's why they're building it near Buffalo. You're going to create massive solar farms. And
I mean,
Tesla's
on
going to have
Investor
to
Day,
step up and do
I
that.
appreciate you remember all that. I appreciate that. But on Investor Day, multiple times and afterwards as well, they've insisted that this is not Tesla all doing it. This is the needs, and this is how they imagine the ecosystem is going to work once this is all up. I don't think it's going to be Tesla doing all that. I mean, some of that really needs federal help, right? You're not going to build these infrastructures without federal help. And I honestly think that is not where the margins are. And I do believe that is, Elon's end priority. Concentrate on what we know best and where there's the most margin, because everything has been built up to that.
How is it not in a margin? This is free energy. He's talked about the sun being the largest nuclear power source.
Sure, but the capex necessary to do that is a capex that we currently don't have. This is billions and trillions. I'm not saying they're not going to sell bots to do it, but it's one thing to sell bots to do it and another one to do it yourself. So I'll be very surprised. I could be wrong. Maybe in 5 years we're talking about solar fields. I know you love solar fields.
If Tesla detects that there's an inability to meet demand or an inability to meet the cost structure to allow the technology to be viable at mass scale, then I agree that they will enter in and manufacture it. But if someone else is capable of doing it, and I think they would have that conversation with partners saying, look, I need you at this price point per kilowatt. I need you at this price point. I need you at this price point on the power electronics. I need you at this price point on storage. And if you don't do it, we're going to do it. We have storage, we have the power electronics. And if we need to start, if we need to be producing panels again at mass scale, we will do this and hit the cost structure. They're just not set up, from a network latency perspective, they're not set up, at least in the US side, for this. So this have to be out of China. So you have to look at the source of supply and then what's around it. This is one of the reasons the Chinese are very successful in batteries. They've honestly, if you rewind the clock back even 10 years ago, it's the Japanese and the Koreans that were on top of this. China was nowhere. They were trying to come up, and they were basically a kind of a third wheel trying to break through, and there's a lot of concerns about it. And now they've stepped up, and they're just dominating in batteries and energy storage. So again, I think Tesla will enter. I agree with part of what you're saying, Herbert. They will enter if someone else is incapable of meeting the supply, meeting the demand, and meeting the cost structure needed for it to be at mass scale.
Okay, let's move on.
I like your overall thesis too. I think they are doing this to be able to create other business units and to be able to continue to. There's so much tech out there that has yet to be created to improve people's lives. So I do think they're doing this. By the way, I think their hardware. I think they target 30% hardware in all their businesses, and I wouldn't be surprised to see autos going back in that direction again. It's going to take a little bit of time, but I wouldn't be surprised to see it even starting this year, starting to move back in that direction, maybe get over 20%.
What? Even this year? Okay.
Well, possibly. So it's not that far off, but the only thing I think that would get in the way of it is when you're ramping a new model, which they are going to be doing a number of new models, there's going to be some inefficiencies in the beginning.
Right. They may not get it this year.
And that's why I say I see people comparing the Rivian to Tesla and range to the Cybertruck, and I'm like, one is produced at a $40,000 loss after 3 years, and one will be a profitable 25 to 35% gross margin product. So you really have to put that lens on first before you're doing comparisons. Anyway,
Okay, let's
I'm
move
off
on to
track,
the next
as
topic.
usual.
So we talked about Robotaxi changes everything. Let's talk about the vote. Alexandra, you've got a presentation to give us.
No, I don't have a presentation, but I just want to keep everybody updated where I think we are and respond to a couple of questions that I get on X all the time. So I think it was efficient to do it now. If you don't mind showing the first slide, Herbert, the blue one, exactly. So what is this? This is Broadridge. Broadridge is the company that manages this year the proxy vote online for Tesla. This is a competitive market. And if you look at prior years, I think last year they used the same proxy vote, but the prior years to that, they used a competitor. So what do these companies do? They facilitate the proxy voting online by issuing control numbers that allow you then to enter your control number for each individual account and be able to vote on the 12 questions that are this year up for vote. And I thought, just, by thinking, or rather not thinking, that then at the very end, on June 13th, they will just push the results to Tesla. Well, wrong was I. So I started digging into Broadridge. Their proxy vote website didn't give me any clue, but then I realized they have a second website, the one I just showed in blue. And that is the website they actually use to pitch the firms to then use their services rather than a competitor's service. And on that website, on the slide we just showed, it clearly shows that they are constantly informing the board about how it is going. So when I get the question, does the board know what's happening? Yes, they do. I mean, here's the proof. They are giving constantly insight about what's happening on the votes to the board. And that's a good thing. So when we saw 2-3 days ago, the board launching a new initiative with Google Ads and a new investor letter and all that, it could be that it was a reaction to preliminary results, or it could just be the strategies they laid out. So Bloomberg, Dana Hull, wrote an article that she was informed, I don't know whether that's been confirmed, that they actually hired a PR firm to help them with this vote effort. So if that is true, there is a whole plan of making sure people vote, keep this all active and all that. And so we may hear more about that, but they're monitoring it. So what does this all mean? Well, we have to vote, at least those that have brokers and banks that are capable of doing it, so that we get to results on all these 12 points. And I just wanted to show, because that was another question I got a lot, the results from the 2018 election. So you can pause here if you want to read this in clearer. But we will have the same type of results this year, meaning we will see 3-4 days after the June 13th shareholder meeting, where they will announce the results but not give us details. We will see an SEC filing with all the details. And so this was the one from March 2018, where they explained how many people voted for or against the original compensation package. And you see that it's actually done in 3 different lines, because they do it after the NASDAQ standard, they do it by the bylaw standard of Tesla, and then they do it by Delaware law. So there are 3 different standards how to count. Obviously, it's always the same number of votes, but it's the abstained people that only figure in the bylaw standards. And so at the end, they decide that they take whichever, in this case, it was the Delaware standard, to apply for it, and came with this number, which is in the last line, of 73%, excluding Elon and Kimball, of votes being favorable to the package. So this type of detail we will get 3 or 4 days after the June 13th meeting in an SEC filing. Just wanted to make that clear. And then the next slide, please, if you don't mind, Herbert, because I don't remember. Oh yeah, this one it is. Super important. So I've been telling you for years, don't invest into index funds because you don't have voting rights. Well, there is State Street, who has now, this was all part of the ESG movement. There's finally, silver lining, something good coming out of it. So let me just set the scene. Index funds are a highly competitive product, because they're just what they are, index funds. You got an index and then you invest exactly like the invest. So whether that index fund comes from T. Rowe, or whether it comes from State Street or Fidelity or Vanguard or BlackRock, doesn't really matter. It's all the same. So in order to be competitive, they lower the prices. BlackRock is the most competitive most times in prices, or they have other perks. So State Street found this perk that 80% of their US equity index funds, the shareholder, the fund owner can actually vote. So that is now 80% of their index equity funds. So what does that mean for our Tesla votes? If you hold a State Street index fund that has Tesla in it, please contact State Street and say you want to vote. Now, they don't let everybody individually vote. They have, I think it's about 10 different ways of voting that you can choose which one you want. And one of them clearly says exactly like the board recommendations. So please, if you have State Street index equity funds, contact them and say, I want to vote, and I want for my shares of your index funds to vote for Tesla according to the board. So that's very important. Fidelity has none of that, because I get that question a lot, but Vanguard also has it. Vanguard has it at the moment for 5 funds. Thank you, Herbert. Those are the 5. They're big funds. So the S&P 500 Growth Index funds, Russell 1000, ESG US Stock, Mega Cap, and Dividend Appreciation Fund. In the first 4, there is Tesla. So if you have these funds, please contact Vanguard and say you want to vote. Now, with them, it's a little bit more complicated. They don't have the option to vote like the board, but they have an option that is as conservative as the board or something like that. So I'll have to get you back to that, but they have an option that's very close to it. So since Vanguard was one of the ones that voted against the compensation plan in 2018, as was State Street, it is really important that those that have funds, either with Vanguard, those 4, or with State Street, any of the 80%, to please reach out to them and get your votes. And that is it. That's the update on the votes.
Wonderful. Please vote. Go to Alexandra's X account, Tesla Boomer Mama, and she's got, depending on what kind of brokerage you're using, they'll tell you the instructions. You can also search on X. What is it? Hashtag
voted Tesla 24, and then the name of your broker in voted Tesla 24.
Voted Tesla 2024. Okay.
Yeah.
Search for that. Okay. Let's talk about the shorts. So are the shorts are they now getting, seeing blood in the water? They're going, okay, here's an opportunity. I'm going to go and, stack up my shorts, because you're saying that they've increased their short position, right?
Well, the thing is, there's still not a massive amount of short sellers. If you want to please show the first chart, we are currently still in an environment where in one day we can cover all the shorts. So anybody telling you, oh my God, we're gonna have short squeeze and whatever, no, we're not. I mean, it would be nice, but it won't. It doesn't mean that the stock can't go up on good news. It can, but a short squeeze, we're far from it. Now, what you do see, however, is all along last year and the first part of 2024, we were under 100 million shares short. Now we're at 107 million. So it is slowly going up and has been going up since beginning of March. So that it is increasing, but it is still very low. And especially it's low compared to the trading volume of Tesla. There's just so much liquidity in the Tesla stock that it doesn't make a big difference. Now, if that trading volume would go down just because people suddenly trade much more Nvidia or Apple or whatnot, then it can become a little bit higher. But we're very far from a short squeeze. So that's the first thing I want to say. But that didn't stop our friends from Sessa Capital. Remember, we did a show, Herbert, in November. I loved that one. Had lots of views. So these charming people have by far increased their short position. They have now the equivalent of puts of $1.6 billion. That's not little. And so if you go to the next chart, you see how that happened over time, if you don't mind. So you see for a long time, they had nearly nothing. You have in the gray line the Tesla stock price with this arrow in the middle. I don't know why that flash is there. But you see that they, in the second quarter of 2023, came to their highest short position, then cut their losses very quickly, because obviously 2023 was not a year to be short, because was actually the opposite. And now they tripled that end of year 2023 position again. So that is the latest we know. That was the filing, because coincidence of in this whole mess, of course, we had the 15th of May, which was the 13F SEC reporting date. So that was yesterday. So the CESA is the most aggressive by far again. Let's keep an eye on them. We'll see in 3 months where they are.
It's interesting.
Okay. Well,
that was super helpful information perspective. Thank you. I was just looking at. I remember seeing the 13Fs from last year Q1, where a lot of the big firms started accumulating NVIDIA, and this was after NVIDIA, kind of shocked the market and said, and they guided massively higher for future revenues. It took the following quarter for these big firms to start adding NVIDIA in volume. It's not like they didn't own it before, but in terms of the big movement and the big additions, NVIDIA had to print the number and then they started adding. It wasn't like they saw it coming. So I don't know, it'd be interesting to see what happens here with Tesla. I didn't see, and you guys can correct me if I'm wrong, any big 13Fs where someone's taking an outsized position. I know Alternative Capital, Brad Gerstner, I know they added to their position on Tesla and increased it. But in terms of these mega firms, I didn't see anybody making, we're making a move here on Tesla. I didn't see it. And
to add to that, Sawyer had published a chart that was in the Wall Street Journal that was completely, misleading about how the 10 current biggest institutional investors voted in 2018 and what that would mean today. But they all commingled it into the same chart, so it became completely misleading. But I addressed that. But that's not what I want to get to. What I want to get to is 2018, the stock was at equivalent of $20 now, right? So we're at 9 times that at the moment. At that moment, there were $10 billion short positions when they voted that first compensation package. And I just want people to understand, of course, somebody who's short cannot vote, but that was the mood in the market. That was the mood in the market. And so you had 3-4 big institutions that held the stock, but every day everybody was going on about short, and how much shorter it can get. And in that environment, in the first quarter of 2018, where $10 billion of short positions existed in the market, they were able to pass a 73% acceptance of Elon's package. And at that moment, it was 70% institutions and 30% retail, right? So institutions were a big chunk of those voters. Yet the Wall Street Journal was trying to now pretend that, institutions were really against it. Today, we have a completely different scenario. We have 9 times the market cap. We have a much smaller short position in the market. And we have, after taking Elon and Kimball out of the equation, but 52.5% institutional, so down from 70 to 52.5%. And we have a retail population that moved up from 30% to now, I'd say, about 47.5%, right? Not everybody of those 47.5% can vote, because in Europe, there are still, brokers that don't make it possible, but we're pushing. Honestly, we're seeing a couple of brokers that in those short weeks have changed and now accepting votes in Switzerland, in Germany, in Holland. So and the big UK based are saying, okay, we may not be able to manage it for this year, but we're looking into it. So there is enough pressure now on the European brokers and banks as well to make this possible, because it's not impossible. I mean, all the excuses they give, just crap, absolute crap. So just saying the environment is so much more favorable to a good outcome this year, yet we're not there yet.
Okay. Yep. So this is the two biggest thing that's going to happen to Tesla in the next several months. The first one is, of course, is the vote. Thank you for putting that together, Alexandra. Please get out there and make sure you put in your vote for the proxies proposals here. And then the second one is 8A, Robotaxi. We've been talking about, is Robotaxi going to change everything? So for the final topic here, let's combine this last three topics into one. Robotics AI Progress. We've been seeing Elon come in and make major changes to the company as he changes the business model from an auto company to a robotaxi business and a robot business. Do you guys think that this transition is happening? Can you see it? Can you feel it? Do you believe it's going well? And then we just saw OpenAI drop a brand new ChatGPT out. And then we saw Google respond the next day. Both of these have just shocked the world how incredible the ChatGPT is now, where you can have this intelligent agents and you can speak to them. They speak right back to you very quickly. You can tell them to translate immediately. Now you can actually show them the world and they can see what you're looking at, can describe it to you, and can take actions based on that. And then there's talk about Apple maybe partnering. They haven't announced yet. Are they going to partner with OpenAI? They're going to increase the capabilities of Siri. Now, finally, the promise of Siri is going to come. What is it going to look like with Tesla? If Tesla's Grok is able to do something very similar to what these guys have shown, which I think from everything I've read, it's something that most companies will catch up with very quickly. You're going to have intelligent bots. You're going to have intelligent cars. You're going to be able to, these guys will have personalities. You're going to be able to ask it anything and it'll be able to answer to you. That's going to change everything completely. Your relationship to the car, how the car is going to behave. You guys have any thoughts on this?
I think you're right, Herbert. And I think Tesla is set up for this convergence world better than others. You talked about a number of different names and OEMs there, and they all basically have to partner to accomplish their task. And there is some level of partnership that Tesla still needs. They still need training compute and so forth. But some of these other companies are like OpenAI, it's strictly software. So they have to partner, if they want to show the best of their services, they've got to partner with various hardware providers. And various hardware providers have to work with these companies. And Tesla AI and XAI, all these Elon Musk companies are building these solutions in a native fashion, and they'll be able to work together to get these experiences out in a unified manner. I think the best way to show some of these experiences when somebody's thinking about the end-to-end design, think about where does the microphone need to be in your vehicle? What level of latency and acoustic performance is needed to have a real conversation? The way microphones are today, they're really meant for kind of just this one-way conversation. You say a statement, and then it pauses, and then the system tries to understand what you said and spits out some canned responses. And now you're going to be in more of this conversation mode. So that really changes things. So you really need companies that are thinking about that, taking that end experience and then thinking about it in every single one of those components, versus being an end company like an Apple or so forth, where they have to think about all that experience and then they've got to work across multiple vendors to accomplish, that. And that's not impossible. And that's to say that it can't happen. And they have a history of doing that. But it is more difficult. It is more costly to do it that manner. So I do think Tesla has an inherent advantage of developing these capabilities, internal to Elon Musk companies. So, that's where I see it. I think they're going to be able to bring the experiences to market faster. I think they're going to be able to do them at a lower cost structure. And I think they're going to be able to update their devices in a manner to which they can continue to improving these experiences over time. So I'm looking forward to Tesla's. I'm looking forward to the Grok experience in my Tesla. I'm looking forward to the Grok experience on a humanoid robot. I'm looking forward to Tesla autonomy services, advancing in my vehicle and then on the robot. So all these things working together, I think, again, Tesla being vertically integrated, they have an advantage.
What did you guys each call your cars? What are their names?
Oh, my X is called Lexi because it's like Alexandra, but it's Lexi, and I wanted the X in it. And our Model 3, which is the kids' cars, is called Jenny because the delivery lady at Tesla Santa Barbara is a real angel. She's absolutely crazy good. She's called Jenny, so the car is called Jenny.
How about you, Jeff?
There's a story here. So I've owned Teslas since 2013 exclusively. And for a number of years, there used to be a slightly more immature side of me. And I would say I'd have fairly vulgar names from my vehicles. And not vulgar like on their face, but when you say all the words together, they probably were not so great.
Come on, give it to us. Give it to us.
I've grown out of this phase.
No. Now we want to know. No.
So I have a Model X Plaid. It just says Jeff's MX Plaid. And it's very boring. And that's what I have today. And that's what my car's named.
What were the old
there's
cars
no
called,
there's no other further conversation to have. All I will say is that
Jeff.
the service people enjoyed when they were getting the vehicle and they look at the car, they look at me, they look at the car, and they're like, okay, funny name for your car.
I'm very boring as well. I just named my car Tessa, which is I'm sure 90% of other Tesla car owners did.
Double S? Tesla?
Yes. But isn't it funny that we all named our cars that, Tesla, again, very forward thinking. They knew that this was going to happen. The cars are going to have personalities, but we're going to be talking to them. They're going to be talking back. This is going to have personalities. It's
so Jeff is going to say Jeff's MX Plaid. Yeah. Hi, Jeff's MX Plaid. Do this and that.
No, I'm going to have to get it. I'm going to have to come up with a cool name.
How about you give us some old names?
Come on.
I like the whole kit experience. I like the whole Knight Rider kit thing. I'm a big fan of that. I've been tweeting about that. You're not going to get an old name out of me, so keep asking.
I will.
It's not going to happen. Yeah. And these things are going to develop personalities. I mean, if you saw the OpenAI demos, like they were, the thing, like she was giggling. It was kind of like a little I don't know, it felt a little strange at times. But these things are, they're going to be less. I mean, I'm sure you could ask it to be robotic and it will give you robotic responses, but I think it's going to err on the side of being more human-like. And that's just going to be wild. You're going to have people conversing back and forth with robots.
But are your cars rather female names, or can we talk about this in gender neutral times? Because obviously Herbert's and mine's are all girl names. So Jeff, would you call your car rather a male name or a female name?
It didn't really have a gender assigned to them.
I won't get any further. It's crazy, but I'll keep nagging. Now that we don't have a nag anymore, I keep nagging Jeff.
We're going to get you to tell us as soon as we press and record. The nag is back. There you go. Okay. Well, thank you guys both very much. This was fun. Lots to think about because the company is absolutely changing very, very quickly. Robotaxi is going to change everything, and we need to go out and get the vote done. Thank you, Alexandra.
Vote.
See you guys. Bye-bye.
Take care. Bye.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.